Meta stock, ticker symbol MATA. Meta is down 45% year to date, and we still remember the big drop in February, which was the biggest drop in history in terms of market cap. But how about the current fundamentals and the outlook? And next to that, on the 27th of July, Meta is going to announce the quarterly results. And to be honest, I'm not sure what to expect here. Yesterday, Snap released their quarterly results and it's down 32% pre-market. So, is Meta going to drop big time, or are they going to surprise everybody? In this video I'm going to show real quickly what Meta does, a view at the historical returns, the fundamental analysis, their major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. I'm very excited to see what you guys think about the stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. What does Meta do? Meta is the world's largest online social network with over 3.6 billion monthly active users. The firm's ecosystem consists mainly of the Facebook app, Instagram, Messenger, WhatsApp, and many features surrounding these products. When we check the latest quarterly results, we see that the revenue is divided into two main segments: Family of Apps and Reality Labs. Family of Apps is by far the biggest segment and has two sub-segments: Advertising and Other. Advertising represents 96% of the total revenue. Reality of Apps represents only 2.4% of the total revenue, but it's increasing in amount of revenue share year over year. Since last year it represented only 2%, so it's growing at a higher pace, which is very nice. In terms of income from operations, advertising is generating all the income, and Reality of Labs has a negative income. Yesterday, Snap released their earnings and Snap shares plummet as advertising demand slumps. So definitely keep an eye on the advertising revenue numbers for Meta in the next earnings. When we check a few highlights in the most recent earnings, we see that all the key numbers are up. DAP, MAP, DAU and MAU went up to 3 to 6%. And although that isn't a lot, you have to keep in mind that Meta is the biggest social network already. So you are not going to see high growth numbers here. And now that we know more about Meta, it's time to check the historical stock price to see what happened there. I decided to include the S&P 500 as the benchmark, and also Twitter, Snap and Pinterest. On the 5-year chart we see something quite interesting. All stocks have a lower return than the S&P 500 except for Twitter. But please check the graph. Between 2020 and 2021 all stocks were beating the S&P 500. And then the crash or correction or whatever you want to call it came. And every stock went down big time while the S&P 500 went down just a tiny bit in comparison. On the 1-year chart it gets even more painful. Meta has a minus 47% return while the S&P 500 has only a minus 8% return. Twitter is at minus 43% and Snap and Pinterest both have a minus 70% return. On the 6-month chart we see a minus 39% for Meta, minus 9% for the S&P 500 and a plus 13.5% return for Twitter. A minus 49% for Snap, and Pinterest is also down a lot with 28%. On the 1-month chart we finally see some returns going up. Meta at 16%, the S&P 500 at 6%, Twitter at only 1.5% and Snap is at 29%. But keep in mind that today's price movement is not included. Pinterest is also up 15.9%. And with that being said, let's dive into the fundamentals to see if Meta is a buy based on the fundamentals, especially since the big drop in stock price. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to receive similar analysis to this one every week, and also don't forget to like this video. Let's continue by diving into the fundamentals. Meta is a 476 billion market cap company, which makes them one of the bigger companies in the world. PE ratio is at 12.75, which is very low for a company like Meta. This also could indicate that this stock is undervalued. 12 trailing month revenue is at 119 billion, and in this graph we see that it went up quite nice and steady. To be honest, this looks very good to me. There was a jump during the lockdown period, so keep that in mind, since the growth numbers seem to cool down just a little bit. Net income is at 37 billion, which gives us a 31% profit margin, which is very high. But keep in mind that the 5-year average is higher than the current profit margin, so margins are decreasing a little bit. Return on assets is at 14.5%, which is very nice, since this is above the 10% minimum. Return on equity is at 28.7% and also above the 10% minimum. And now the part that I love about Meta. Return on invested capital, to me the most important number here, is at 26.7%, which is really high. And the thing that I like is that it's above the 5-year average as well. So Meta really knows how to invest their capital. Another thing that I really like about Meta is the balance sheet. They have almost 44 billion in cash while debt is at only 14 billion. So this means they can easily pay off the older debt and still have 30 billion left in cash. For a company this big, this is huge. So definitely like this part of the business. But it's very important that free cash flow is growing, because this is used to pay down debt of course, but also to buy back shares, do acquisitions, research and development and pay dividends. But since Meta doesn't pay any dividends right now, it can be invested directly into the business. And take a look at the free cash flow growth. It really skyrocketed in 2020, and before 2020 it was growing at a steady and decent pace. The big jump is of course related to the pandemic period, where they made a lot of money with the advertisements, so keep that in mind. But overall this looks very good to me, although the growth will come down in free cash flow. Since late 2018, Meta started to buy back shares, which is very nice, since this adds a lot of value to the investor because EPS will go up, which attracts other investors, and on top of that your share will become more valuable since you own a bigger piece of the company when shares outstanding are decreasing. So this looks really good to me. Next up are the fundamentals of Meta versus the major competitors. I decided to include Twitter, Snap and Pinterest. We see that Meta is by far the biggest company in terms of market cap and employees. Meta has the lowest PE ratio, which is very interesting. All other companies are trading for a much higher PE ratio. Meta has a 26% revenue growth year over year, which is the lowest. Snap has the highest revenue growth year over year, but also the highest 5-year revenue compound annual growth rate. Meta has the second highest revenue compound annual growth rate. Meta has the highest net income compound annual growth rate, and quite logical, also the leverage free cash flow compound annual growth rate. Meta has by far the highest margin and also the highest return on equity, return on assets and return on total capital. So this looks very good for Meta. All companies have enough money to pay down all their debt, but Meta has by far most cash available, so to me they are definitely the winner here. Overall, I think Meta is the winner. It's the biggest company of this list, but also the one with the best fundamentals in my opinion. So let's start with the last part of this video, which is the price target. I'm using the Everything Money software to come up with 3 price targets. Please check out this software since it's one of the best I ever used, and this is not promoted or anything. So definitely check out Everything Money. So I have a low, mid and high assumption based on what we see for this company in this video. I expect a 10, 12.5 and 50% revenue growth for Meta. For profit margin I fill in 30, 31 and 32%. And it's the same for the free cash flow margin. For the PE ratio I'm aiming for 14, 15 and 16, since it's a large company that could face lower growth numbers. But 12.75 seems just too low, so that's why. Price to free cash flow is the same, and I'm aiming for a 50% return since I can get an easy 10% return with an ETF in the long run. I want to build in a bigger margin of safety, so that's why I'm aiming for 15. Right now Meta is at $172 a share. I hit analyze and there we go. Meta is a buy based on my assumption. So if you believe these numbers, make sure to start to do your own research and dive in deeper. We get a low price target of $220, a mid price target of $280 and a high price target of $360. So this looks very good to me. And to be honest, I think I will stick with the low to mid price target. My final conclusion on this company is that it's hammered down quite a lot. And maybe the earnings will push it down even further. So definitely waiting to buy this stock after the earnings of the 27th of July. If the earnings are pretty okay and nothing special is mentioned and the outlook is still expected to grow, this could be a buy for me. Fundamentals look great and they have a lot of cash available to do acquisitions or invest in other parts of the business. So based on what I see, Meta stock is a buy. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.